Hi, this is Zach from Zach's Traders Cafe. We'll look at the major markets on Wednesday, the 25th of May. And the consolidation we had between 60.50 and 6,200 is resolved. It would appear on the upside. RSI broken through 50 to leave it at 53, which is normally a decent leading indicator on upside. And also we closed above the 50-day moving average at 62.03. While we're above that 50-day line and perhaps even down to being above the 200-day moving average at 61.60. One would be looking for this break to gather momentum. The top of the channel here as high as 6,600, which is the top of a rising January feature there on the daily chart. As I said, while we're above the 200-day line, not really much reason to blink as far as the prospects for this market. The other point to note is also that we've effectively snapped the right-hand shoulder of an extended head and shoulders formation, the head in April and the right-hand shoulder for May. So that also would give positive momentum as a failed charting pattern. Onto the DAX, and this echoing the situation that we've seen at the FTSE. There was this sort of grey area really here between or just below the floor of this rising trend channel from the end of January. 97.37, the initial low, with the low yesterday, 97.73. So finally testing that low and then snapping back upwards in a quite aggressive fashion there with a key reversal to the upside. RSI back above neutral 50 as well. And really initial target there with the 200-day moving average at 10,128. It's already been hit in pre-market trading above that, but there's not really much between the 200-day line and the 10,474 peak of last month. So we should see some fireworks there for the DAX. Stop loss back below the 50-day moving average, 99.72 at this stage. Onto the Dow, and we had that sort of strange settling around the 17,400, 17,500 zone, basically neckline support. We've obviously snapped back to close above the 50-day moving average. That was the trigger spoken of previously as far as a resumption of the overall rally from the beginning of the year. So around 17,710, the 50-day line, and while we're above that, looking for a return to 18,000 plus over the next couple of weeks on the Dow. Early and end of day close back below 17,500 now. Would even question the idea of further upside for this market. Onto the S&P, and here we see the break below what was a rising trend channel feature, but we never really convincingly stayed below that 2033 April floor, just a minor bear trap below it, back above the 50-day moving average now at 2062, and while there's no day close back below that, 2100 seems relatively easy, and as high as 2200 at that February resistance line projection over the next few weeks. Onto the Nasdaq, and this was the market that went sort of sideways in a mini range, 4,300, 4420. Easily cleared that, the 50-day moving average at 44.27, and while we're above that, looking to fill that gap up to 45.22, which is left from April. That should be hit over the next couple of weeks, and obviously then there's a chance of a decent rally towards the best levels of the past year. That could take this market towards the 4,800 level, as shown by that rising February trend channel. Onto the currencies, and here we've got sterling still in this range between roughly 144, 146.50. Want to see that break really, that peak 144.64 before assuming a target of 150, which does seem to be on now, given that we've had support here, higher lows at and above the 50-day moving average at 143.76. Euro dollar still weak, testing the area or testing down towards the floor of this channel from the beginning of the year, or rather the end of last year, November, and the 200-day moving average area at 111.01. While we're above that, still a buy on dips for this market, but breaking that would then suggest that a top is in place, a serious top perhaps, for the single currency. On to dollar yen. Here we got still this battle with the psychological 110 level, and also with the 50-day moving average. That's currently at 109.87. Basically, while we hold on to this area, then one would suspect we could still break higher. Maybe we're consolidating at the bottom of this, at the top of this trend channel. But end of day close back below the 20-day moving average, 108.53, probably the best sell trigger at this stage. Otherwise, through 110.60 would suggest we are finally going to break the downward pattern that we've seen since the beginning of the year. Finishing off with gold, and with the risk back on for the equities, it's been hurt and broken this neckline support at 1240. So below 1240, the risk of as low as 1162, which is the 200-day moving average. That break of that extended RSI uptrend line from November was a leading indicator on the downside, and worked rather well for those who believed it. That's it for me. More updates at the same time tomorrow.